Alright guys, please like and subscribe to the channel, click the icon to alert you if I make new videos. I appreciate that. Just going to get started today. Hopefully you guys had a great trading day. Hopefully you guys had a great trading day. Yeah, Jin, I don't know how to pronounce your name, Jin Yang. I actually was getting copyrighted infringement with that. I don't know how I'd go about that. I like that song a lot, but um, what's going on, David? Yeah, Steel, I'm gonna be on every red day that I have. I don't want them, but if I make them happen, I will be here to be the first one to admit it was a red day. And the biggest reason was LK. That was probably one of the biggest stocks I missed in a long time. I was kind of prepared for it. Should have got up a little earlier. And I was planning on getting long, risking off that 395 or 385 mark. I liked it. I was looking for one more breakdown under 385 was my entry. We quickly flashed below $4 and I wasn't on the computer. Next time I get on the computer, it's up to like 470. And man, it took off and it was an easy trade. That could have been big time. You know, that could have been a double of the account. It could have been a 50, 60, 70, maybe $100,000 day. If I got real aggressive with it, probably wouldn't have been a $100,000 day. I don't think I would have got that aggressive with it, but who knows? I needed to get a good entry on it. But hopefully you guys had a great trading day. Obviously, I lost 8,700 today. You know, not fun to lose $8,700. It's been about, I think, like anywhere from like 7 to 8 days, maybe even 9 days of green days in a row. But today I took a red day, and I want to make sure you guys are here to learn from my mistakes. LK was my biggest kind of fold. You know, I started off the day up about 6,000 bucks on APT, and then once I got through APT, I basically took loss after loss after loss after loss, and paid the price. So yeah, guys. So let's go ahead and look at the reason for the day. So APT, let's go ahead and look over, and that was my first trade of the day. Wait, let's back out of this and go over show trades. I gotta show my trades here. I don't know why that's not showing trades. Let's see if we can unclick it or no. Let's try that. There we go. Okay, so here I am trading APT. So I'm longing these dips, risking off this wick here. A lot of times, the algos in the moment, the stop losses and things out of the gates will get caught up. When I see a flush out at the morning open, I usually start to long it. I knew it was a mass play that had gapped up. It had a big volume yesterday. Actually had more opportunity later in the day as well, but I got long at 1,000 shares at 15.38, 2,000 shares at 15.35, and I added one more time into this dip right here at 15.67 on that dip. And then I wanted to see a rip, and I got a rip through 16, and I sold everything all out 16.45 for about just over $1 a share gain on APT. It actually went almost, it just got above 17 quickly, but that was about a $5,000-$6,000 trade on that one. And that was my first trade of the day to start the gates, and I was like, all right, green, awesome, you know. From that point on, I got too confident, I got too cocky, you know, and took too much size on almost everything today. And the reality is, it's all psychological, guys. And being green, being on a green streak, I was taking more size. And when you take more size, you don't allow yourself as much wiggle room, and you also get a little bit more emotional. And that's like the same thing with long-term investing or even mid-term investing is The more size you take, the more you're going to look at a certain stock. But the reality is, in longer term investing, you should never have to look at the stock every day or every week or every month. You buy it to hold it. You know, it's like a savings account, but basically, you know, something that you don't have to look at. You know, if you go on a trip to Europe for 35 days, you don't have to be like, okay, what's it at? What's it at? What's it at? Right? You don't have to be like that at all. You know, when you're in a stock that you trust and a business that is successful no matter through ups and downs, you have to make sure you're looking at things like that and knowing that, you know, you're trading accordingly, right? And you're trading. Oh, you guys can't hear me? Mic check. Mic check. Mic. Can you guys hear me? Is that any better? This is worse. You were fine before. Okay. Is this? I know on Instagram Live I'm good, but on YouTube, can you guys hear me? Oh, I just ruined the audio. Okay. Mic. Oops. Mic. Is this better? Is this better than before? It's too loud. I guess I can hear myself. Oops. Mic. I wonder if it's my webcam that's catching my... I think the webcam is doing the volume. It shouldn't be. Should be my headset. Anyways, sorry about that. I think it's not my headset. It's my mic or my webcam. Hello. Yeah, it is my webcam. It's doing. That shouldn't be what it's. Hold on a second. Wow, I saw your nostrils. That's funny. Okay. Anyways. That's good. So yeah, so APT scary. Yeah, I am pretty scary. But so, you know, I was playing APT and that was great, and then basically took a lot of losses the rest of the day. Unfortunately, took a $4,000 loser on MBY, took a $5,000 loser on LK, took a $1,500 loser on LLIT, MFA took a $1,100 loser on that, ONCS $3,000 winner, SAEX $500 loser, SRNE $857 loser, oil $200 loser. Webcam mic for some reason sounds better. Yeah, I don't know. The headset, I don't know. I'll have to figure that out. At least I'm streaming. At least I'm live. Before I wasn't even able to go live. So, but well, let's see. So I know I have some green trades though because I only lost 8,700. Let's see. 4,200 on APT. IFMK 3,300. But yeah, a lot of losers today. A lot of losers today, guys. That's just the reality, you know. Today was just overall just too much red out there for me today. And really, there should have been one or two trades today. It should have been APT and then LK. LK should have been my main focus, and it was, okay? So, I actually played this pretty well. Unfortunately, I didn't let it ride out. So, let's go over this trade. So, LK, I saw this thing. I was actually watching this pre-market, okay? I didn't realize how, Jeez, that really just tumbled. I was using this 374 line to kind of risk off that level, okay? And we started to get a ton of volume in here. I mean, look at this. Almost 2 million shares traded on a 1 minute candle right about $4, okay? So you could have gotten filled. What is 2 million shares times $4, right? That's, $60 million. Sound is off? Mike. I don't know what's going on. Mike. Wait a minute. Mike. Mike. I think I got it on my actual headset now. Okay, cool. That should work. So I saw this morning. I was like, holy crap. I wake up at 5:58 every day, so right about here. But I usually naturally wake up like literally like somewhere in here, 5:30, 5:20, somewhere over here actually, 5:20, 5:30. What a short this would have been, honestly. What a short that would have been, and what a long as well. That's the beauty of stocks is, you can play short and long. But the biggest stock I missed out on was LK. So saw this right around here this morning. 374 was my risk off. I actually wanted to, in a perfect world, to see that break. And if we were going to break that level, I was going to go long it. Okay? But it's all a mindset thing, right? If it breaks that level, you get a little bit more scared. It could be a little weaker, and it's already down this much. If it breaks that level, it could go down one more time or make new lows more than once, right? It's kind of like a rolling effect. But 374 was the line in the sand for me. And I started watching it in here. This actually gave an opportunity right there under $4. I believe that was the candle right there. And that's kind of what I was looking for, is anything under 4 to start adding. But I wasn't quite on the computer yet. And then we just kind of started consolidating on low volume, kind of grinding up. And at the open, we were already up to 490. And I'm like, okay, I saw 374. Now we're to 490. It's already like $1 a share. I'd like to see a dip out of the open. Well, that's not what we got at all. We literally ripped straight up. I was actually watching to get some shares, but I can't remember why I couldn't. I think at the open, Thinkorswim doesn't fill you. Like right at the open, I think I was actually trying to long like a couple thousand shares at the open at like 5:05 just to get a starter position. But I didn't end up getting filled because of Thinkorswim. And then we just literally, like, if you would have gotten long pre-market at all anywhere in here, you could have just been selling on all these holes. We holded once, twice, 3 times. We opened up above 10. I would have been all out. We got above 1050. My gosh. So what a rip on that one. There'll still be more opportunity for this one. But then I was watching for the bounce play, because there's always a bounce play. So here I am getting long 11,000 shares at 684. Scaling out at 2,000 shares up in here and up in here, just because I felt like we're going to break down. Took out the rest, 9,000 shares. I just started adding down here. And basically stopped out for a little loser, and then I was longing again 6,000 shares, and basically just confused myself. I was trying to get down in here some longs, and I thought this was going to be a breakdown below this VWAP level. I sold out everything right on this candlestick here. Unfortunately, I think I had about 24,000 shares of this one at one point. And I was looking for, about a $10,000, $15,000 winner. And honestly, this would have been a much bigger winner if I just would have held the damn thing. My average was about a little poopy, right? No, it wasn't great. It was a 696 average. and then I kind of recycled my shares and got long with like a 680 average. But it wasn't enough, you know. I was seeing too much red. I don't like seeing too much red on my P&L. And we grinded back up through 8 and like literally got up to 880, and that would have been a hell of a winner. You know, that would have been, ugh, I don't know what that would have been like, but I think that would have been at least probably 10, 15, maybe even $20,000 winner. And that's kind of what I was looking for on that consolidation phase. You know, we have that huge rip up, and then I wait for the kind of the consolidation on the parabolic, and usually we get a ramp back up with some volume. And unfortunately, I took a little bit too much size, and you know, with too much size, I took two losers on this trade. But if I took smaller size, I probably would have had, I don't know, one, two, maybe even three winners if I took smaller size. But I was in a little bit too high, and the size kind of shook me out. And that's just the way it is. I mean, I can chart things, you know, fairly well. I kind of know how each stock's gonna react depending on AYTU is at 165. Yeah, it is. Wow. But I could kind of, you know, react on you know, how stocks are gonna react based on their chart. And I knew we were going to get somewhat of a bounce, but I was like, this one has terrible news. It fell all the way down here. We had this huge rip up with hardly any sellers. We finally got the sellers, and now the sellers are meeting the buyers for once on the market open. And we kind of consolidated and, you know, saw this move in here. And then we had that secondary rip and ramp, and that's kind of what I was looking for. But again, the size made me double guess what my thesis was. And I took two losses that cost me $5,000, which could have been one. I could have been one or two, maybe even three winners for $5,000, $6,000, $7,000 winner with smaller size. But that's the price you pay with sizing up. You know, sizing up makes you think more. Sizing up makes you double guess yourself more. It doesn't let you play out the trade more. It doesn't let you get into the trade and let it ride. It makes you kind of get very fidgety. You know, you're like in, and then you want to get out because you see the profits, and then you kind of see the profits kind of come down, and you're like, okay, should I sell? And then it kind of comes back up, and you're like, wow, that's even more profits. And when it comes back down, you sell because you're like, okay, I just saw these profits, and now I got to lock that in because I don't want it to tank all the way back down to break even. But then when it doesn't go to break even and it goes up farther, then you want to chase it, so you're chasing on the green side. And then when you chase it, then you're like, okay, now I got to sell it because I just chased it, and I don't want to take any losses. And then you're like, okay, because this go back down to where you started. And it's this constant fight in your head, right? It's called emotional and psychological capabilities, okay? And that's the most important thing, I think, in trading is being able to keep your emotions and psychological intellect in check. And it's just, you know, one of those things that you always have to be aware of, you know, what's going on, how your size is. Are you sizing up too much? Are you getting too emotional? And on this one, it's a case of me sizing up with too much size and not being on the bottom of this. Like, I could have sized up with this much size, and I could have been willing to risk a couple $1,000. But since I didn't get a perfect entry, then it made me stop out. Rather than if I get in with a little bit smaller size and I have a little bit more wiggle room, then I would have been still in the trade and taking profits on the upside, right? So your entry is really important when it comes to how much size you're taking. You know, if I can nail the bottom of size, then I'm going to make a good amount of money. But if I don't, a couple of times, then I'm going to take those losses and walk away. And usually my rule of thumb is on any one stock, if I take more than, you know, two losses on one ticker, I'm done with the ticker. I don't want to get too emotional with the thing. And I was done as soon as I took that second loss, that $5,000 loser. NBY, I saw APT moving, and I started longing up in here. And I stopped out through here. Too much size again. The slippage cost me. APT was really ramping. I thought APT was going to get through $20. I really did. And that was going to take NBY through 1, maybe through 120 for a big winner. But I got stopped out with slippage there. MFA I took big size on. Wow, this one would have been a great swing. I didn't realize that. I should have been longing in here. Wow. See, that right there would have been a good swing. I don't think we're going to break that $1 mark tomorrow. Look at this chart. Had a huge rip up from 32 cents all the way up to 280. Now we have 1, 2, 3, 4, pretty much 5 red days in a row. I think tomorrow's the bounce day. AYT, so MFA is a swing idea. What was the other one? Come on, this market is. I haven't been buying in my longer term investment account. Just very small. I'm waiting for this market to start coming back down. I think we're gonna retest those lows, honestly, and potentially go lower. So I usually have a certain percentage that I like to allocate every single day. I could do it per week, or but and I might do it per week, but I still allow the same amount of money that I allocate in my longer term investments every day. I don't like to try and time the bottoms in these type of markets. I never will. No one ever will. But I've been, longing. I actually longed the SPY Delta Airlines on this day right here. That's when I took the most size that I took during my longer term account. So somewhat I did nail the bottom. My SPY longs were 222. 225 and I think like 218, something like that. Delta Airlines was 2240. Boeing I got at 104. But it doesn't matter, I still have 7/10 of cash, almost 7/10, maybe 8/10 of cash on the sidelines. I didn't take a whole lot of size. I'm trying to slowly get into the markets over the next 6 months, 8 months, 10 months. And I have no doubt that I think, in my mind, I think there's a shot we could go lower. I think, in a perfect world, as a longer term investor that has a lot of cash on the sidelines that isn't invested in the market like much at all with a longer term perspective, in a perfect world, the SPY would get under 170. Now, do I want that to happen? No. That means a lot more lost jobs. That means, a lot of problems in the world and the economy. But the reality is, guys, this happens. You have to know, in this world, this stuff happens, okay? All you have to do is go back and look at the history, 87, 2001, 2008, just recently we had a flash crash in here. So, it is what it is. That's how this economy works, We go up and we go down. And I know, as a longer term investor, what I'm getting myself into. Oops. I know what I'm getting myself into as a longer term investor, guys. And I know that you guys don't want to hear about my longer term investing speech. But yeah, I mean, it's one of those things that, you have to, be aware of, And some of you guys have been asking, what are my favorite longer term holds? Well, I'm looking at, I believe, what they call cyclical stocks, which is like Delta Airlines. I'm looking at Delta. I have some size at 2240, but we're going lower, I think. Just because the planes are not off the ground. That's my favorite airline. Kraft Heinz. What a freaking dump this has taken. Great dividend. Been around long time. I think it's a very safe idea, even though we've taken a huge hit. But I have to do a lot more research on that. I know Warren Buffett's in it a lot higher. I'm looking at OXY because of Warren Buffett, and Carl Icahn now, I believe, has taken a bigger stake in this company. I believe it was founded in 1920. And I know I'm not a huge fan of the oil companies, but this thing is worth, in my opinion, a lot more than where it's at. I think Warren Buffett was buying up in here. Now Carl Icahn has a bigger stake, and I think he has more on the board. I think he's on the board now. So there's a lot of big names looking at OXY. Obviously Coca-Cola. I have some Coca-Cola at 38. I also have some Nike at 63. But my biggest loser, guys, is Boeing. Oh, he does? TMJNDO. Can you reach out to me on Discord? I know you bought the guide. Reach out to me on Discord. I'd like to talk about Oxy. I'd like to get a little bit more understanding about that company. I actually was buying Boeing up here, and this is one of my favorite longer-term investments. I know that it's not good right now, but they're helping the government right now with. They have the biggest shipping cargo planes, I believe, in the world, at least in the U.S. There's no way they don't get bailed out. They just do too much for the government. They have government contracts left and right. It's going to be a long road ahead, don't get me wrong. But, they pay a dividend as well. And who knows what they look like, at the end of this. But from a longer term, 20 to 30 year perspective, I don't think Boeing's going anywhere. People got to fly. And they're the hub of flying. All the airlines reach out to them for planes. But it's not just that. They do government work, They do helicopters and all this other stuff that you don't even know about. So it might be a long road ahead, and I'm down like 50%. I've been adding in here on this one. I just add a little bit every day. Maybe we break 89. What did we go in 08? What did Boeing go to in 08? Let's see what they went to. In 08, Boeing went to $30. So we're at a different time. Wow, they went to 89. So honestly, I think the lowest that Boeing could possibly go is like $60 a share. I think that's the lowest they could possibly go, is like $60 a share. If they get below that mark, if they get into the 50s, there's just no way. And if they get into the 40s, I think that it's all over for them. I think that they would collapse. I mean, as much as I want, I know the government's, I'm not, bail out, right? I know a lot of you guys don't care about longer term because you guys care about, you don't have a lot of capital, and you just start trying to figure out how to turn $1,000 or $500 into, a lot of money, and that's what I kind of preach. But I have a lot of cash right now on the sidelines. I've been waiting a long time to invest it, and I don't want to start investing just in the markets. I have a little bit of the markets, but as a younger investor, as someone who can afford to lose at a young age, I can have a much more volatile account. But I'm also getting into companies that have been around for 100 plus years. I'm even looking at GE, and yeah, I'm looking at Apple because that's the Warren Buffett's biggest position. Okay, I already have some Apple. Okay, I have some Microsoft. But the reality is, guys, Warren Buffett was saying this, and you shouldn't have to diversify your account. And I'm just saying what Warren Buffett was saying is, he made his fortune off of basically sizing up into stocks that he trusts. And it's so hard to find a company that's undervalued that when you find it, you feel comfortable just holding it, right? And in the markets, you're only going to make, what is it? Like they average like 10% a year. But in OXY and Delta Airlines and these hotels and these diners, right? You can make 5, 1,000, 1,500% in, a couple of years with dividends, right? So, I've been doing a lot of research on '08, and this is a different time, right? But I can afford to, take some risk on some well-known companies that have good financials that have gotten crushed during this time that I'm looking at holding for 20 or 30 years plus. But the biggest thing to me is they have to have a dividend, okay? No, I'm not a big real estate guy. I've really convinced myself out of it. Carl Icahn is currently shorting commercial real estate. And, it doesn't matter what you do. The stock market is the heartbeat of the world. It really is. Like, you can't run from the SPY going down. It doesn't matter where you're at. If the SPY is going down, the economy is not good. Okay? But I think, on the flip side, I think that real estate can fall and the markets doesn't have to fall. I think the markets are the biggest reflection of any economy ever. Real estate could be doing poorly, and I think that it would affect the markets a little bit. But if the markets are falling, it's a trickle effect, So, plus, you get dividends and you reinvest, and reinvesting dividends are so crucial. Okay, and I know that I'm going on this tangent about longer term investments now, but that's because I'm starting to look at longer term stuff because the market is falling, and because I'm a 25-year-old kid who has a lot of cash on the sidelines that is looking a place to park it. And you know I parked a little bit in the markets, but it'd be cool to be able to walk away from a couple years from now and making smart decisions and put myself financially to a point where I have my money working for myself in such a way that I'm making good gains percentage wise on the stock, and I'm reinvesting my dividends, which is free money, because I made smart decisions at a young age and I set myself up for the rest of my life. Even though now, I'm just fine. I can live off the money that I have for probably the rest of my life. But, it's fun for me. It's fun to learn stuff. It's fun to try and compete. It's fun to try and put myself on the map. It's fun to, try and, I'd like to look at myself when I'm Warren Buffett's age and say I'm worth more than 87 billion, right? And I think that if I invest longer term now, with the right stocks and the reinvesting and the keep accruing, right, then I can potentially, have that opportunity. And options are a great opportunity, but I'm constantly, looking at, the three things for me is, longer term investing. I want to make great decisions on. I want to be able to be good at my longer term investment portfolio, and that's why I'm being smart about it. I'm not going all in. This is, the markets are going down, and I'm starting to allocate a little bit at a time. There's some great opportunities out there right now, but I think there's going to be better opportunities as we start to clear up this mess. I am biased because, in all reality, the lower the value, the better for me. But the reality is, for everyone else that's in a longer term portfolio, it's going to hurt them more. So, it's all just, there's always a buyer and a seller, and you always have to be interested in that concept. And I'm going to pay the price just like everybody else is if I make a poor decision. If I was buying up in here or up in here like I could never do, I'd feel so bad because I literally spent 3-4 years of my life, 5-6 years of my life, to see it washed away in a month or in 4 weeks, 3 weeks. That's the reality. But you can go back and look and say, okay, this stuff happens all the time. Just go back and look, guys. This stuff happens all the time. Not to necessarily this extent this quick, but it is what it is, guys. You have to make smart decisions along the way, and I'm putting my money where my mouth is. I've already invested some of my capital into the markets. And if it goes down further, I'm gonna pay the price. But I still have, a ton of cash on the sidelines waiting to take advantage of companies that are getting too low too quick. So my top 5 dividend longer term stocks, honestly, Boeing, Apple, probably Kraft Heinz, KHC. I don't know. I really do like Nike. I feel like they're the only retail company that's like never gonna fail. They're just so well built. They have they're so well run, and they have a dividend. And then there's one more. I mean, honestly, OXY is probably my other one. Pays a dividend. It's an oil company. It's gotten crushed. I like to see 2 of the most successful investors in the world be in it. Warren Buffett and now Carl Icahn took a bigger stake. So there's some reasoning behind this. Two of the biggest investors in the world, some of the biggest investors in the world, are in this. A speculative play is PCG. PCG is a spec play for me. What's another spec play? MBIO, spec play. I'm probably going to have some spec plays. Oh, Intelsat, 5G. Man, this thing, did it close at 118? This thing is getting crushed, man. That's crazy how it's gotten crushed like that. Yeah, And then obviously Coca-Cola is another one. Yeah, it's a great one. I got in at 38. But not a lot of size, to be honest. It's all cool, sunshine and rainbows. But my biggest loser is Boeing right now. Just because I've been adding into it. But I'm a longer-term believer in Boeing, you know. I'm not talking in the next year. They're going to go through some hardship in the next year, maybe 2 years. But 10, 20, 30 years, piece of cake in my mind. They could be probably the biggest. I don't know. I think that they're going to dominate that side of the world. And hopefully dominate Airbus or maybe buy them out. That'd be crazy, but cool. Anyways, guys, that's really all I had today. Red day nonetheless. Please like and subscribe to the channel. Click the icon to alert you if I make new videos. I'd really appreciate it, guys. I'll see you guys tomorrow. Cheers, team, and go Hawks.